We've already seen when policy dynamics get a little bit crazy, boom, the bond market vigilantes come in. And that could happen at any time in the U.S., if they go crazy with deficits, as an example.
Yep.
You have the bond yield pop above 5. The markets would get in line in a hurry. The policy would come back something to a more moderate. So on a long-term call, I think it kind of gives you a pretty bullish setup for stocks. You just have to have a little cash on the side to buy those kinds of dips.
So you put your faith in the bond vigilantes to keep the White House's ambitions in check a little bit.
I think, it'll help to make sure we don't do anything too crazy. Or out here in France as well.
Yeah.
Right?
In terms of the international space then, so that's US stocks. You still, find a lot to like there, clearly. In terms of international allocation, you don't allocate to Europe. You allocate to emerging markets, it seems.
Yeah, we're overweight emerging. We cut back, very beginning of July, we cut back our EFA, which is Europe-Japan exposure, pretty substantially. And we just think, one, the whole Trump agenda doesn't look all that positive for Europe. He's going to want more defense spending, and he's going to want some sort of tariff trade relief. Both those things are growth negative for Europe.
So that you can't grow with the defense sector. I mean, it's just too much government spending. It stops them fiscally spending on other things.
And they don't have the big growth tech sector, right? If AI is the big driver of this next leg of the bull, which I think it has to be, Europe kind of doesn't have that. You can make the case that China is the closest second in the world to that, and there is a much bigger tech allocation, if you will, or good tech stocks inside of the emerging market indices. So we're overweight there on the idea that that's where, valuations are very attractive. And we're sort of playing chess a little bit here, thinking that the next move Xi has got to make is he's got to really go after stimulating the domestic economy. It's the only way to get Trump off his back. And he's got the wherewithal to do it. I mean, France doesn't really. Creedy just ran through the numbers there. They're not very good. They're 7% deficit, et cetera. So China's the one that has the levers and has the incentive. They just haven't made the move yet. And the markets are trading off because of that. But we think that's where valuation is. So we're overweight there.
How do I... If I'm trying to think about a portfolio, I've got the US markets. You think the opportunity there is if we get a dip, we buy it. Europe looks very cheap. The rest of the world looks very cheap. How do I build a portfolio that reduces volatility that looks like it's coming? How do I build some volatility protection into my portfolio?
We've got an overweight in cash and an underweight in bonds.
Right.
So usually bonds are the source of stability. But we're thinking, because of sort of the Liz Truss put, if you will, we're thinking the bonds are the potential source of instability. So we're underweight bonds and we're overweight money markets, which actually, in the meantime, my old friend Tom Keene back in New York, I mean, it's his triple short money market fund is actually yielding a pretty decent yield. So we think that's the way to position. And then within the equity market, to be a little more tilted towards the value stocks, the small cap stocks, which have better valuation and maybe better support in a downdraft.
Catch me up, Stephen, on your thoughts on the crypto universe, given we're at 100,000 and a lot of people talking about the SEC will have a very different approach to crypto this time around under a Trump presidency than the prior administration. Institutional investors busy rethinking what they thought they knew about crypto, or not right now?
Anna, my hats are off to the guys making money in crypto. It's just not what we do. Like I tell my guys, let's focus on what we do well. We can analyze businesses, understand what their moats are, what their future earnings are, discount those back, and figure out what they're worth. Crypto is sort of like gold. You're kind of guessing what the next guy is going to pay for it. And some people are very good at that. That's just not what we're that good at. So I don't have a real view on crypto. I just view it as one that we don't have a view on, so we'd rather not play that game.
Stephen echoing Powell there, saying it's like gold. Digital gold is his view yesterday, he expressed.
Yeah, maybe we get a Fort Knox equivalent in the United States. We'll wait and see what that would ultimately look like. Stephen? Great to see you on this side of the pond. Stephen Auth, CIO for Equities at Federated Hermies. Let's take a quick look at what the Core 6 looks like this morning around Europe and what we're watching in terms of the individual moves. Bit of a move into tech. Luxury seems like it's having a fairly good morning. ASML is up. Ferrari, LVMH also both tracking higher. Novo is a little bit softer. There was some data floating. I saw a story floating around about compare and contrast with the Lilly products. That stock is under